Good morning, everyone. Gold and silver are back at the forefront, pushing to fresh all-time highs as lower interest rates look set to persist well into 2026. We have real yields under pressure and momentum rotating back into hard assets. So let's take a look at what the technicals are telling us. Starting with the daily chart, gold first tested the $4,380 area, the previous all-time high, before pulling back toward $3,900. That retreat didn't break the structure. Instead, it laid the groundwork for a clean and consistent uptrend from late October. And prices broke even higher, taking out the rising channel and the former all-time high resistance. We're now trading in uncharted territory. And while RSI is elevated, this isn't unusual for gold. In fact, previous pushes to new highs came with even higher RSI readings, suggesting momentum can still stretch further. After strong breakouts, markets often look to retest the breakout zone for confirmation, but the broader daily structure remains firmly constructive. So now if we zoom into the 1-hour chart, we see since mid-December, price action was capped around 4,350, forming a clear ascending triangle, as higher lows kept pressing into resistance. Once that level gave out, the breakout was decisive and momentum has been respected ever since. Today's pullback held the lower boundary of the breakout, keeping the structure intact. So as long as price remains above this zone, bullish momentum stays in control. The next level to watch sits around $4,500, acting as a local ceiling, while extension tools point toward $4,550 in continuation scenarios. As deeper pullback would only come in play with a clear break below momentum support, where slipping under 4,450 could open the door for faster corrective moves. Bottom line, momentum is strong, structure is intact, and with thin year-end liquidity and a supportive Santa rally backdrop, gold remains a market to watch closely, especially as big moves continue to create opportunity for active traders.